How to sell at the top and maximize your profits. That's what we're going to cover in today's video. If you know me by now, I'm Jagir, the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been trading currencies for over 15 years, and now my focus, full attention, is on the crypto markets. I was featured in this best-selling book, High Probability Trading Strategies, back in 2008. And I bring that knowledge and wisdom to you. If you like today's content, like, subscribe, hit the bell notification. Let's dive in. Now I'm going to use a couple of examples. Let's jump into my video on Dogecoin first of all. On May 6, 2021, this is one of the YouTube videos that we did. May 2021, May 6, what's that? That's nearly 2 months ago. And the title of the video was Dodge the Dogecoin Bullet. Must watch before buying Dogecoin. And the video, if you look at what I said, is I did a 1, 2, 3, 4, 5 Elliott Wave count, and I said this is a likely high, and we're going to see a big correction. So the next part of the video, same video, I'm just going to click on it because I'm trying to take a screenshot. I said we're going to see likely, not going to, likely, high probability, we're going to likely see a big correction. And the motivation for this particular video was one of my friends that day I did this video. I actually did 2 videos on Dogecoin this day. He came to me and says, wow, Dogecoin is booming. We need to get involved. My take was, no, now's not the right time. We're on a wave 5 high and we're likely to see a big correction. And that's what I'm going to cover with you next. Because there was a great question from one of you, which was, how do you maximize taking profits? When do you know how to sell, when to sell? To maximize the upside and minimize the downside, but also minimizing the amount that you hold the position when it does a deep pullback. So let's jump into Dogecoin and see what happened. So if we look at the chart, I'm just gonna get everything off the chart. I've got a few drawings here. When I did the video, it was in this space here. Yeah, you see that space? This is where the video was. It was pretty much bang on the top. The next 2 or 3 days, it did a massive pullback, pulled back even more, pulled back even more. In fact, what we should do is, let me see what drawings I got on Dogecoin. Yeah, let me just get rid of, let's just do this. Let's just pull the chart like this. This is the information that we had at the time. Let's just move these notes off screen as well. Because what I want to show you is what you can do ahead of time. Because you got to remember, this video was done on May 6th, before the correction, which is a leading indicator. You know, I hear everyone talking about the wick off, and we're looking at wick off, Bitcoin, wick off, wick off, wick off. If you heard about it, it's been all over the news, but everyone's talking about it in hindsight, right? The price corrected big time. Now it's like, oh, it's the wick off. And now they're trying to kind of tie the pattern into the wick off theory, which was, the wick off was in the 1800s, mid 1900s, another guy like Ralph Nelson Elliott, just another theory of psychology. But what we want is our leading indicators, where we can look ahead of time and go, right, this particular chart pattern suggests very strongly, highly probable that we are due a big correction. There's going to be profit taking. Profit taking means people are going to sell. People are going to dump. They're going to sell. They're going to take profits. People that got in early have now made an amazing profit and they're ready to sell. And these are the latecomers. These are the latecomers to the party that always lose. Always lose. And we want to avoid being that latecomer to the party. We're going to be the early part and ride that wave and sell near the top. So how do we know when the top is? When does the top, is it likely? So at the time with Dogecoin, I had around this much information. If I just do it like this, there's this great feature on TradingView. I think it was this day here, roughly around here. I think it was the day before the top. So we had this information. I was using bar candlesticks, by the way. So you'll see on the YouTube, it was bars like this. Doesn't make that much of a difference. I just like to, for these videos, use a line chart just as a bit cleaner for you to see. So what I did was I counted here, say, look, this is like a 5-way pattern, 1, 2, 3, 4, 5, which is textbook Elliott Wave, 1, 2, 3, 4, 5. This suggests panic buying. Panic buying, which is, I heard about Dogecoin, people are getting rich off Dogecoin. I want to get rich off Dogecoin. I'm not missing this boat like I missed Bitcoin or like I missed Ethereum or like I missed whatever else. And people were stampeding in. And this is when you want to be selling. What was my title? It was Dodge the Dogecoin Bullet, meaning dodge the hype, dodge the fear of missing out trap. So what I did was, and I'm showing you this because it's logical, it's repeatable. It's not just magical where it's my 15 years of experience. Is actually, no, actually all we did is there's particular Fibonacci ratios that measures mass psychology, and it's represented in the price action. And it tells us how the mass herd, which is everyone involved in buying and selling, is feeling. So when we look at this, all I did was measure this low here, which is the beginning of this wave 1, measure this wave 3 high, and project price targets forward. And my mentors, I was studying, Elliott Wave theory, how it combines with Fibonacci for many, many years. And what I was taught was typically a wave 1 to 3 projected from a 4, that this red line represents the 100% of that price movement. So what does that mean? Let me just make sure that's clear to you. You don't need to get too analytic on why. It's just that it was just trial tested, proven over decades of very intelligent people that said when a wave 1, well, let me just get rid of this magnet. When a wave 1, which is down here, to a wave 3, the maximum typical for a wave 5 is that same length for a wave 4. And that's what this red line represents. This 1, which represents 100%. That's this here. So we're saying that's the typical maximum. So as soon as I see that, I go, okay, just that one Fibonacci number. There's a few other factors to take into consideration, like momentum. The momentum indicator was becoming overbought. That just tells us the rhythm and the momentum of the market. In particular, we're using Dogecoin as the example. So right now, if I didn't have a position at this point, but my friend had quite a significant position in Dogecoin, and he was asking me, what should I do? I said, well, if I was in your shoes, I'll be looking to take profits right now. And how I would structure it as profit taking, I would use a bar chart, like a candles, and I would trail my stop loss, if I had a stop loss feature, on a 1 bar low. So I'll go, right, if the price goes below this low over here, like it pulls back, I will sell at this point, and then I will trail my stop on a 1 bar low. And if you haven't got a stop loss feature, which most people don't, especially if you're on the decentralized exchanges, you can just use a price target. Use something like CoinMarketCap, and you can set a price target, and it will jump up when the price is hit. So now let's just do bar by bar. What happened, right? So the next bar moved up higher, so you'll move your stop loss higher to say I'm going to sell if the price goes below here. Why? Because we're at this 100% of the wave 1 to 3 projected from a 4, which is a very typical maximum wave 5. When we see this structure unfold, it's the psychology of the markets telling us, all right, this over here is panic buying, especially when this is the same size as a wave 3. That suggests panic buying, and that's not sustainable. The people buying, the amount of money coming in to buy is going to run out. That's basically what it is. And it kind of goes really, really steep. And then the people that got in this phase down here, just think about it logically even. People that got in at this phase here, anywhere here, what do you think they're thinking? What are you going to think? If you're like 30% up, 100% up, 1,000% up, 10,000% up, because people that are going right down here are going to be significantly in profit. And when it's up here, well, a lot of people are going to, this is a profit taking, and then this is major profit taking at the end of a wave 5. So then what happened next? Let's just do it bar by bar. We would have sold at this point, if we had a stop loss. But then what happened over the next few days? Boom, down, down, boom, boom, down, boom. And and it's still going down. But what we projected was, around, I think it was June 26. By the way, I'll leave forward because I'm short-sighted. June 26, we should hit a price target of at least, it says here, around 37 cents. Right? And I didn't know how it's going to unfold, but typically there's a correction of a 3-wave structure. But today's video is about how to sell at the top or near the top. It's hard to get right at the top. Sell near the top and maximize your profits and not hold when it's going to pull back, likely to pull back 50%, 60%, 70%, because it's not nice if you're, let's just say you're 300% up and then all of a sudden, a few weeks later, you're 30, 40, 50% down. We want to be selling near that top. So that was the Dogecoin example. So let's not go into where the market is right now. What I wanted to focus on is this point here. We can do particular price projections to say, right, can we project the pattern and the price of a wave 5 high where we're likely to see a big correction? Boom, ready to take profits. How do you take profits? One of the easiest ways, this is a daily chart where every bar represents one day. You just put your stop loss on a one bar low when we're at this price target. Not too soon, because we don't want to do it down here because there's still movement for the upside. But once it starts moving up closer to this region, we just go 1 bar low, 1 bar low, 1 bar low. Price takes out the 1 bar low, you sell. If you haven't got the stop loss feature, use something like CoinMarketCap or CoinGecko. You can set price alerts and say, right, the price of this 1 bar low is 54 cents. If Dogecoin goes below 54 cents, bam, I want to sell. And then when the bar goes higher, let's just say you didn't sell here and you ended up going to this 1 bar low, then it would have been at 58 cents. 58 cents. And it went to a high of around 71, and then it just, boom, came right the way down as low as 19, almost 20 cents. And then today's price, let's just see where today is, because I want to cover a few more examples for you. And we are down here at the moment. I'll do a separate video on an update on Dogecoin. So now let's look at another example. This was the video I did on May 5th. May 5th, which was sell. The title of the video, if you look down here, is sell when everyone is buying. In other words, how to sell at the top and not hold your position when it's going to do, likely being the operative word, likely going to do a big correction. So this was Ethereum. And this video was in a macro picture where I said, look, it looks like, look at the green numbers. We got a 1, 2, 3, 4, and we got this panic buying happening again. Like, look how similar it is to Dogecoin, this panic buying, right? When you see that, you don't need to be panicking. You need to be rubbing your hands, especially if you're in great profits, to go, right, it's time to take some profits. Why? Because what tends to happen after panic buying or wave 5, boom, big correction. So what happened with Ethereum? Well, let's have a look. Let's just move this. Let's just do the same thing. So that video was done around here. So if I just do this, just to keep this chart a bit clean, I got a few bits of information on the chart, and we just do this replay, and we can actually hide everything on here. It was roughly around here. So if we just look at this, we're saying the price target. This was around, a typical wave 5 high. The price target was around 3,200. Now Ethereum blew past 3,200, which to me said, wow, this is extreme panic buying. People saying, I'm not going to miss this boat. Buy. People just FOMOing in, fear of missing out. They're just herding in like a herd mentality. Bam, you should be getting ready to take profits. But again, with a 1 bar low. So you can maximize, because when it overextends, you want to maximize your profit taking, so you don't do it at a fixed price. You just kind of trail your stop loss or your price alert. It takes a bit of work day by day, but it means you might get an extra 20, 30, 40, 50%, or even 200, 300%, depending on where your buying point was. So now, once it exceeded 3,200, which is, roughly around here, and the momentum went bearish, like the blue line crossed below the red line. So my thinking was, right, if I did this. I had a lot of Ethereum at that time. I sold a lot. And I did it by 1 bar low. So what we do here is we just go, right, what's the 1 bar low? Well, currently it's here, which is 3,200. So 3,200. Next bar comes in. We go, great. So you don't know ahead of time where the wave 5 top's going to be. We can just predict it with high probability and get near the top. So now we're going, look, we've exceeded, going by the analysis that we did on May 25th, sell when everyone is buying on Ethereum. This is one of the YouTube videos. You can go back and watch it so you can see it, because we did this ahead of time, before the correction. So that's really important. It's a leading indicator so you can anticipate. So rather than reacting and getting emotional about it, you can get logical and mechanical about it to say, look, we're reaching what looks like a wave 5 high. We don't know exactly when it's going to be, but we know it's looming. It's close. So now we go, right, we're going to go to this 1 bar low. Next bar comes in. Next bar comes in. We go to this 1 bar low, if we haven't been stopped out, because the other one was quite close. Now we've got this 1 bar low. So you can see you're just kind of edging it up day by day. You're almost capturing more profits. And that one or this one, definitely you would have got stopped out, or you would have got your price notification to say Ethereum has now gone below 3,700. So the top over here, yes, it was, what was it? 4,384. Closing price was 4,179 that day at the top, and you would have managed to sell at 3,700. Not bad, right? Because what happened next? Well, we know what happened next. If you've seen Ethereum, well, it did this amazing correction. Look at this. Boom, boom, boom. I can't remember if I drew out what I thought. Yeah. So you see these price projections that I put in. I said a typical correction, and this is what I said in the video, is a 38 to 50%. And 50% over here was 1,800, 1,800, which seemed ludicrous at the time because Ethereum just made its all-time high at 4,400, 400, 600, 4,500, let's just say. You know, all this great news is coming out. You know, the 5199 or whatever the EIP improvement is to burning tokens, so it's deflationary, is coming out, and there's ETH 2.0 and all this other positive news. But just going by, because most of the market is still driven by speculation, regardless of the utility of the token, still driven by speculation. So here, it was more of a case of, right, it's likely to pull back to a minimum of 2,200 and even up to 1,800. And I think it might even pull back deeper. But let's just see what happened, right? So it pulled back to, boom, 2,200. So it's gone from 4,000. What was the high? Like if we look at the high, we said it was, yeah, let's just call it 4,400 to the nearest 100. And now it's gone down by 50%, right? Boom, 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 boom. And now it's doing a deeper correction. Look at that, look at that. So here, but in this zone ahead of time. So the question is, and the purpose of today's video is how to sell at the top. How to sell at the top. Well, what and how and why did I do those projections? Well, there was a few things, but I'll suggest watching the video because it's great seeing it live. Like, you know, it's all well and good doing analysis in hindsight once the price has gone up and down, but you can't act in hindsight, right? You're, well, why didn't you tell me that a week ago because I would have sold? Or why didn't you tell me that a week ago so I could have managed my position better? Here we did it ahead of time. So if you watch the video on May 5th, it's a great video, but I cover, you know, sell when everyone is buying. In other words, you know, I can't tell you what to do, but it's likely that the market is going to do a pullback. And now I'm not a savant, I'm not a genius. It's just, this is the psychology of the market, and these identifiable patterns tell us a story. And when we can read that story, we can go, right, we can make a mechanical, objective decision rather than kind of looking to the gods and going, right, if this is meant to be, Ethereum's going to go to $10,000. Yes, 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 I'll be rich. I can retire. I can quit my job tomorrow. $10,000. No, that's just not going to work. We need to be mechanical, methodical, and objective. Let's just do one more example. So you can see the power of it though, right? Because the question was, I think it was Elaine. Elaine, you asked, how do we sell at the top? How do I take my profits? How do I take my profits, right? How do I take my profits? And I'm showing you how. Most people don't know this, by the way. Lastly, we're going to focus on Bitcoin, right? Bitcoin is the biggest brand in crypto. It's how people kind of get involved, even institutions and commercial, and then the retail investors. Bitcoin is the brand. It's got the largest market cap. It's the first cryptocurrency, 2009, January 2009. It's a powerhouse store of value. We know that. But when it comes to pure technical analysis, on the 19th of April, I said, is this the start of the bear market for Bitcoin? This is on April 19th, right? Before any big correction. Now, at the time, it sounded ludicrous. Why? Because Bitcoin was just making all-time highs. Like, it literally was at something like $64,000 per Bitcoin, the highest it's ever been, right? And everyone's kind of like, whoa, this is the beginning. You know, $100,000 Bitcoin, we're going to see a $200,000 Bitcoin, we're going to see a $500,000 Bitcoin. And I believe that's going to be the case. However, the psychology of the market at this point tells me otherwise. It says to me, it's running out of steam. Like the buying is getting weak. This is called a fifth wave diagonal, where we look at this, these black numbers here, 1, 2, 3, 4, 5. And then there's a lesser degree, 1, 2, 3, 4, 5. And you see these lines, these are Fibonacci price extensions and alternate price projections to say we're likely coming to a high and we're going to see a big correction. We're going to see a big correction. right? And I said it really clearly in the video, really clearly in the video ahead of time. It did a bit of a correction here, but we're like, look, that's just the beginning, because that's comparable to these ones. Well, and I was like, look, we're probably going to get into this range. And this next screenshot, you know, I drew this. I said, look, corrections typically happen in 3 waves, and we're probably going to see a deep correction back into this range of, you know, less than 40,000 in the 37,000 range, but even as low as 29,000, which is this particular low, which is because typically a correction occurs in the previous wave 3 to wave 4. So we projected that ahead of time. So if you're holding Bitcoin, you know, and you're able to take profits, and you want to, it depends on what time frame you're working. If you're like Michael Saylor, who's on a 10-year, 50-year, 100-year time frame, you never sell Bitcoin, and that's a great strategy, right? But that may not work for the average Joe or the layman that's kind of getting involved for the first time, not being able to handle 50% pullbacks, because it's tough, right? It's tough seeing your account go from, let's say you got $100,000 over Bitcoin, and now it's worth $50,000 in a matter of 2 weeks. Nothing's changed other than the price action, right? So we here projected ahead of time. You know, you'll see these price targets. I strongly recommend going back and watching the video. April 19th, it's a brilliant video, but it just said, look, we're hitting a high and we are likely to see a correction. But then what happened? Well, you know what happened, right? Because we saw this big correction, and it was even deeper than anticipated. Look at the sell-off, right? We did the video around here. If I just pull this point up, if I just hide everything as well, just to keep the chart really clean, right? It was roughly around here, I think it was. Let's just have a look. Yeah, roughly here, right? And we said the price is likely to get to down here. At the time, it's still sounding crazy. You're absurd. How can you say such a thing? Bitcoin is going to 100,000. I go, look, I want it to go to 100,000 because it lifts the whole markets. We know that. But what you can also do with Bitcoin, by the way, is use it as an indicator. When you know and see that Bitcoin is likely to do a big correction, it panics the whole market, and then altcoins tend to have an even bigger sell-off. You want to be very aware of that, because there is a correlation to some degree. So what happened from this point? We had a pullback bump, and then we had a pull up. Now, by the way, I did another video at this point. If you don't mind, if I can just pull it up, if I just go to the channel, it was, I think it was it this one? I think it was this one. If I just have a quick glance. Because what I showed in this video, it was an update. Is it this one? Yeah, I think it was this one. Yeah. So here, I think this is a daily chart. No, it's a 4-hour chart. Let me just get to the point where I did it on a daily chart. Because here, what we projected ahead of time was the next opportunity to potentially sell. Yeah, here we go. This is what I was looking for. So here, look, the price came down, the price came up, and I said normally corrections happen in a 3 wave. Now the count actually turned out slightly differently. It was a lot deeper, a lot more impulsive on the downside. But we said here, we're likely to see a local top around here. This is exactly where we said it. And then the price is likely to do another leg down, you know, and even we drew it over here. And then what happened here was we had, at this point, it went a bit higher. But believe it or not, I was actually shorting Bitcoin at this point. And it just went boom, boom, boom. And it just tanked. Look at this. It just sailed off. And it just showed so much weakness. And even this part here, like even where we are right now. And where are we now? Like even at this point here, it's still showing signs of weakness. So we're still probably going to see another leg down. But today's video was about how to sell at the top and how to maximize your profit. So we see it shown 3 examples. We said Dogecoin, boom. We did the video, watch the video again. And look, it's not saying that we're going to be bang on all the time, but it's just high probabilities. Then we looked at Ethereum. We said, look, it's likely to be a top. And we saw, boom, another big correction. We're talking about 4,400 right down to as low as like 1,800. Like, geez, you know, even when I was doing those numbers, I was like, yeah, what's the likelihood of Ethereum tanking that much? Because it's a powerhouse. I go, look, the psychology is the psychology. There's smart money involved here, and they know how to take profits, and they know then how to rebuy. And when the price drives up, it'll go into all-time new highs. That's just the cycles of the markets, the game that we're playing. And it's like Don't hate the player, hate the game kind of thing. Here we did the Bitcoin as well, same thing again. So there you have it. You now know how to sell at the top or near the top and maximize your profits and not hold on to the downside. If you like today's video, like, subscribe, hit the bell notification. Please, please, please share this video. Share this video, because most people, especially if they're new in this space, are getting burnt hard. And the worst part is, more often than not, they are up at some point, 200%, 300%, 400%, 500%, sometimes on their whole account. And then this happens, boom, back to break even. Boom, now we're at a 20% loss. Boom, now a 50% loss, 60% loss. And even worse, some people are getting involved right at the top. You know, they're FOMOing in and their first experience is, boom, 60%. Like, hang on, my friend told me he made 300, 400, 500%. I just started buying Dogecoin, ADA, Bitcoin, Ethereum. Boom, I'm like 50% down. What do I do? Well, if you have this knowledge and wisdom, all of a sudden you have an edge on the market because you know psychology or the price action that represents psychology. And we can see this ahead of time. So again, like, subscribe, hit the bell notification. We're close to 1,000 subscribers. I thank you for subscribing because we're over 700. Can you believe it? In 9 weeks, we went from 5 to 700. And we want to get, we want to get to 10,000. We want to kind of keep growing. So what I want to finish on today is a quote. Let's finish with a quote from this book. I'm loving this book. It's Warren Buffett and George Soros, The Winning Habits, Investment Habits of. So this one's from Stanley Druckenmiller. It says, Soros taught me is not whether you're right or wrong that's important, but how much money you make when you're right and how much money you lose when you're wrong. All right? Interesting. There you go. See you soon.